Okay. Good afternoon, everyone. My name is Hanan. I am an investment manager at Ally Ventures. It is such a pleasure to be your moderator for today's session. I'm sure whoever that's in this room today, you guys will get a lot of alpha. So boo people outside. So today we have 3 panelists and researchers coming on the way. Sergey, we have Grace, and we have Anar. I'll pass the mic for you guys to introduce yourself, and then we can kick off.
I will start. Hi, everyone. My name is Sergey Kunz, co-founder of OneInch, software architect, software engineer for 20 years. OneInch is the innovator in DEX aggregation space. We introduced back in 2019 aggregation among decentralized exchanges. Nowadays, we are driving intent-based swaps with the best execution in the market, also cross-chain since September this year. Thank you very much.
Hi, I'm Grace. I'm from 7X. 7X is a New York and Asian-based fund, and we help projects build their Asian market and also do co-research with them together. Yeah.
Hi, guys. I'm Anar. I mainly do early-stage investments at Rockway-X. We're mainly a VC, but we also have a credit fund which deposits liquidity to DeFi protocols, etc. So yeah, that's, I guess, the high level.
So just to set the scene for today's conversation, OpenFi essentially, by definition, is an integration of decentralized decentralized finance with traditional use cases in the finance realm. And in today's conversation, I have some stats to bring up. So the crypto market is under 100 billion in revenue in comparison to other other industries. For example, tech is currently at 5 billion. Banks is around 4 billion. So with this in mind, how do you guys actually see revenue generation and monetization in general in the crypto space? How do you think about it?
I can start. Web3 space gives you ownership about your assets, right? So it's compared to like Web2 or in general internet adoption. Like Web2 was more about sharing, social media, and also digitalization of industries. Banks, for example, went from phone to telegraph, phone, and then to internet and cloud. Yeah? They are still migrating to cloud, most of the banks, except my Signum Bank in Switzerland. They offer already crypto. So, and Web3 is about freedom, composability, accessibility, freedom, I call it. So, and in Web3, you have different ways to get additional yield to earn, and you are open also to educate yourself. Right now, if you have not a lot of money, if you go to the bank, you have only limited solutions where you can invest, and you will really get small yield. But in Web3, you can go to Uniswap pool, put your liquidity into the pool, and you get on each trade a little bit from each trade and collect some yield. So, or you land it on the Aave and someone borrow it and you get money. Money is not coming from nowhere. Yeah, it's generated through demand and supply, and this is the energy what is produced through this, and this offers only Web3 technology. Yeah, the current financial industry, the whole Web2 world was built because they had no such technology before Satoshi came and introduced a new way, yeah, what we are living right now.
Before Satoshi came and gave us 89,000. Grace, how do you think about monetization in general?
Yeah, I think in Web2, thank you. I think in Web2, like most monetization model is related to simple fees or like advertising, and then in crypto mostly related to you mostly come from the token side or like some DeFi related yield. I think from investors' perspective, previously when we talk to projects, they mostly don't have a clear business model or don't have a clear monetization model, and it's only about tokenomics. But right now we can see a trend in the projects that we talk to. They are thinking about getting more users, and then based on this user, they're thinking about adding payment as a way to make revenue by charging from the payment transaction fee. So I think this is something new we noticed, and also we're looking at payment very actively recently. So this is the new trend we noticed.
Is it not? This is not good, right? If someone tried to monetize already in these early days. If you look in the internet adoption back into the days, and compare with the crypto adoption in terms of users, we are right now in year 2000. So just imagine if Facebook would start to monetize that early, they would not see any success, right? No one would use them because someone would appear and would maybe not charge fees. One inch is not charging fees because we want to grow. And like extracting money right now, it's a crime from our point of view.
Yeah, I think the key change is that right now, applications are more ambitious. They think they can get more users. And then also there are many Web2 applications that already have a lot of users. They come into crypto. So they normally, they actually, when they raise or come to us, they already have like at least 10 million users sometimes. And then they will think about monetization based on that.
Well, one inch has 15 million users. Yeah.
Yeah.
And we are most used application in Web3 space. So I'm not sure that they have really 10 million users who are really doing the transactions. I'm not sure.
Yeah, it's not like charge fees from user directly. It's like they will add a payment model that you can, like, for example, pay fees for the creators, or like pay fees to the gamers, etc. So like the creators, they can get some revenue from traditional payment routes.
I guess what we're trying to say is 1 inch is special, but Web3 ecosystem is also very huge with like different verticals and different use cases. Anar, what do you make of monetization in crypto in general?
Yes, I think there's like 2 distinct groups. You have like the OG DeFi protocols, the primitives like Uniswap, Aave, like the lending and borrowing and trading primitives that are already monetizing, right? Like they're making money. But then you have like the layer of applications building on top of those, whether it's like 1 inch and aggregation services and also OpenFi applications as well, the ones that are offering banking services. They're gonna like find a tougher time monetizing right now. And I think there's just a different monetization model for them. Like I'd compare like OpenFi applications to Revolut, for example. They're a neobank. They don't make any money from transaction fees. They make money from cross-selling you different services, right? Whether it's lending services, because they've built such a big ecosystem, whether it's trading stocks, etc. So they're not making money from, their main business, they're making money from cross-selling you. And I think just one more thing to add, the advantage that crypto has over the likes of Revolut is that you have a token, right? You can build interesting tokenomics to incentivize users to hold your token, and that's actually your main business, trying to like convince people to buy your token and hopefully also earn rewards, yield by holding your token as well. And you can offer benefits for users that hold and stake your token, like lower transaction fees or like higher priority, depends on what you're doing. But yeah, so yeah.
I definitely agree with all 3 of you looking at how monetization in crypto in general falls under 3 buckets. There are transaction fees, staking rewards, and the tokenization aspect of it all. And as you've mentioned earlier, like 1 inch has not switched on the fee generating, like have not charged users essentially. And from the VC perspective, what do you make of this with like new businesses coming into the space and slowing down on the revenue generation part?
For new businesses, revenue is not important. It's more so like how does your product actually differentiate versus what's out there, and what's your unique strategy to acquire that set of users, right? So yeah, like monetization definitely comes later down the line, and yeah, with apps like obviously 1 inch is more like they've been around for some time, so I think
5 years.
Yes, exactly. And you guys have also been like starting to expand in terms of creating the 1 inch wallet, for example, trying to acquire users into different verticals. So that's like, I think like the case study of like what most apps that don't monetize today will start to do. Once they have like a certain ecosystem effect, they'll try to cross-sell users to different products.
By the way, we built a 1 inch wallet because I was annoying to use MetaMask. So we built a great wallet for 1 inch users.
Yeah, it's great. I like it too.
Especially for me. The same with cross-chain swaps. It was terrible always to transfer from Gnosis chain assets to another network, and I told my guys, we need something where I can, under 2 minutes, swap from one asset to any other asset on different chain.
So you clearly are innovating in every aspect of like pain points that you've experienced as a founder into the product that you built. How do you translate this into the way that you think about making money off of this?
It's not about money at all. So, yeah, we are building the future of our living. Yeah, it's not just finances. It's also more. Web3 is more. It's about ownership, about freedom of every person in the world. So the money right now is not fair distributed among the globe. Like most of the people are poor. Most of the people have no access to the financial system. Yeah. So, and we built the future right now. So we are early in, if you compare to internet adoption, we are really in the year 2000. Like, can you remember what was 2000? Yeah, what kind of mobile phone you had, and how did you use the internet in 2000? Yeah, this is the same here with crypto. In terms of like how to be sustainable, how to survive and keep growing, this is another question. So if you build new technology, new innovations, you need to grow, you need to adapt to get also the mass adoption. Then we speak about, okay, how can we earn to cover our costs, to exist forever. This is the case with 1inch right now. We can exist for 70 years. Based on our reserve, what we raised, we of course manage properly. I have South Korean best friend, our CFO, who is taking care about portfolio management of 1inch. And we try, of course, to relocate our investments. We have some assets in Ethereum, some in Bitcoin. Bitcoin, Ethereum is now growing. We have more money theoretically and more years to live. And of course, we try to earn, but not on the user. We have business partners. We have software as a service. We have API service, what we sell to different wallets provider. They need high quality of data for portfolio, for example, or they need routing paths, or they need current prices. They come to us, we can give really high quality of data, and they need to pay a little bit, and this is business to business. And here we can extract a little bit, but it's still fully acceptable for our partners because they also provide good service to our customers. They can grow, we can grow. Collaboration is the key for success.
I think I agree to some extent that, and in the early stage of crypto, in its infancy, maybe it's not all about money, but I would like to pick your brain, Grace. How do you navigate that as an investor between the desire and appetite to make money off of the investments that you've made and the ability to cater to different user groups, including those who can't afford to be part of it?
Yeah, first of all, when I say payment, I mean like there are some new payment routes adding into crypto project, facilitating tips for creators, which is like a new scenario for Web3 space, because like or like real PMF for Web3 space, because there are many Web2 companies that they can like enable creators to earn revenue through this way globally or permissionlessly. So actually I'm saying like a lot of projects, they're adding this payment rail, and then they might like charge a little fee from the payment process, but it's charging from the payment company, like from the profit from that. It's not that like they're charging from their user. It's like if you tip some creators, you charge a percentage from that. So it's not that like we are like want our projects to start like for example turning on fee or like making profits. As we are a VC, we more focus on the ideas, etc. In terms of exiting, I think like our focus is on supporting new projects, good founders. It's not about focus on exiting.
But don't you think that in the long run, the costs will be transferred to the end users anyway?
Which part? You mean the payment part?
In general, yes.
I think it depends. Like for example, you want to tip $5, and then out of $5, maybe like 4.9 goes to the people you want to tip. So yeah, it transferred to part of the creators, but I think it's just like you also like need to make some room for the payment company to survive.
Yeah. Okay. Anna, what do you make of that? How does Rockaway view the balance between wanting to have a nice exit versus the crypto ideals and morals, I guess?
Don't say wrong things. You are one of our investors. Just kidding.
Yeah, it's a good question. I think obviously you want the protocols that you invest in to generate revenue at some point, right? That's how. But okay, but in crypto, it's kind of backwards because the token doesn't the protocol doesn't necessarily have to be generating revenue for the token to be trading at like high valuations. And the reason is that because the market already prices in a certain fee, if that makes sense. So it's like, even though Uniswap didn't have a fee switch for a long time, if you're doing a valuation model, you can assume that Uniswap is going to take a 10 basis point fee at some point and value the company through that means, right? And generally the market values it like that too. And the fee switch, them actually activating the fee switch is usually just a catalyst for the token price. Okay, like now it's happened, they're generating revenue. So yeah, it's happening. So again, like obviously you want to invest into things that will generate money, but I think network effects in crypto should be valued more than, well, depends in what case, but network effects are valued highly in crypto. So I think it's 50-50 almost. Like it's nice to make money. It's also nice to keep your fees low to make sure your users stay with you, and then like yeah, introduce new products to them, etc.
Uniswap is really a nice example. They have enabled the website fees, the app fees, right, for swaps, and Uniswap Labs collect this money, not DAO. And this fee switch, what you mentioned, is actually from the protocol, and protocol is governed and owned by the DAO. So theoretically, if Hayden Adams go for IPO, they cannot actually enable the fees without having a good conversation with the community, with the DAO, right? And actually, also if they enable the fees, he doesn't own it because it's owned by the DAO.
I see. Yes,
yeah?
yes.
It's kind of a really interesting game. I would love to see how that will come out. I'm pretty sure they will go for IPO in the next years. They prepare everything. I'm pretty sure, and it would be interesting to see how they manage this situation with the DAO.
Let's dig deeper into that a little bit on community governance in general, right? So let's use DeFi as a use case, and DeFi governance tokens. How do you think that impact how we think about monetization in the long run? Does community governance hamper or accelerate that?
I think for DAOs to be compliant, that the community has to make the push to let's turn on the fee switch. It can't be really the team themselves that are saying like, oh, let's try and monetize, etc. To basically be compliant, that's why you have a DAO. That's why you have like, you can say that it wasn't me that decided to start making revenue. It was like my community, right? Like I don't have a say in this. It's the people who hold the token that vote and say that we should start making money. So I think in the long term, obviously a lot of teams will, like we're seeing this now. There's a new meta where like even liquid funds like Split Capital, for example, recently submitted a proposal on Blur to turn on the fee switch because that's a bullish catalyst, right? So we've also seen this. I mean, Uniswap recently did it at the protocol level. It wasn't not just at the front end. That's why like we recently saw the pump. There's been many examples of this.
More4 Governance just recently voted for the transferability of the token.
Exactly, and it wasn't the Morpho team, even though the Morpho team has been discussing it, and we're investors there too, and like we see the discussions that we want to go down this direction, but again, it's usually that someone in the community has to make the proposal, and then you go through this vote. But yeah, like it makes sense, and like I think it depends what your protocol is. In some areas it makes sense to turn on the fee switch, in some areas it doesn't, but generally it makes sense too. So, and I think most protocols will go down that route. So, yeah.
Will 1inch ever charge users?
So it depends on the community, I would say. We build protocols always with kill switch. So DAO can stop the protocols if something vulnerable would be find in such a protocol. And DAO can adjust some settings. Yeah. Also enabling fees. It's already kind of implemented, but the fees would be charged not from the user. They would be charged from the professional market makers who are behind the settlement. So we have a new thing. We introduced December 2022 our intent-based swap, where you as a user declare what you want, and how it's going to be executed is a job of professional market makers like Wintermute or arbitrage traders. They are chosen by the community, by the way. So community stake one-inch token and can delegate kind of, we call it unicorn power. So it's also kind of utility of our token. So, and theoretically DAO can decide, but market makers need to charge because they make money. Yep. They make money out of the users, and the protocol ensures that the user get best execution because we have a competition between market makers and arbitrage traders, and they try to settle first. We have kind of really specific approach with Dutch auction, what UniswapX also used. We had luck that they mentioned us in the white paper, so at least for our innovation. And yeah, it's possible, but we have no such discussion in the community right now because we want to grow. We as a community, as a project, especially from 1inch Labs, we want to grow, build, expand. We need to take over the whole financial industry. If you look on the market size, DeFi is that small. Crypto is a little bit bigger, including centralized exchanges, and traditional finance is that big.
Yep.
Yeah. So, and we can offer with our already today technology 24/7 trustless and non-custodial trading for tokenized real-world assets, stocks, currencies. Everything is possible. Everything what can be tokenized can be traded 24/7 in highly efficient manner right now already.
I agree. Okay, Grace, maybe when we think about, we've touched on transaction fees a lot, we've touched a little bit on token, but one final question on token before we move on to maybe discussing yield rewards. What do you guys make of like token buybacks? We see this happening when PathDAO moved to virtuals, the Luna AI agent creator, for example. What do you make of that, and how do you think that will shape the industry forward? Do you think there will be a lot more companies buying their own tokens?
Who is that? I'm sorry, who is doing that?
Virtuals is an AI company that started as a PathDAO, and their most recent product, I guess, is called Luna. It's a virtual AI agent.
And they do buybacks?
They bought their own token from when they were converting from PathDAO to the virtual token.
It's like migration, not?
It's a migration,
Yeah.
yes, correct.
But real buybacks I didn't see. No one. Also Binance didn't buy back. They burned what they had already, from the ICO, right?
Yeah, I think buyback, also token burning, or like fee switch, they're all kind of one way to add some value to the governance token holders. I think from my perspective, I think like fee switch might be more popular in the next few years after like SEC didn't accuse Uniswap for doing that. Yeah.
Okay. Did you want to add something, Anar?
Yeah, I was going to say Rollbit also do it, but Rollbit is a bit. I don't want to say the word scammy, but like it's a bit weird. They're on two chains.
But really, did you verify that they bought it on the market and they burned it after that? Did you verify it?
I personally didn't.
I was looking for that because we were also like looking what makes sense, who is doing what, and we had also this game theory. Okay, what if DAO decide to charge fees on the market maker side, not on user, market makers, yeah, no professionals who make anyway profits by arbitrage trading, and this money can be collected and through specific decentralized Dutch auction can be used for buying back of 1inch token and burning it directly. Yeah. So we did analysis and we didn't find anyone who is doing that. Some of them say they do that, but at the end they just burn own reserves from minted tokens.
Exactly. Yeah. But yeah, I'm more generally. I lean towards like the real yield tokens. I like when I get like USDC and ETH in rewards as opposed to like getting the native token. So if a protocol is generating money, okay, I'll stake it, and I just want a portion of the fees that you're earning, as opposed to like buyback and burn mechanisms, which yeah, like I think it makes sense sometimes. Obviously, like you have like Web2 companies doing this, right? And it's also like signals to the market. Well, okay, like a buyback and burn mechanism is like, I don't think it's as effective as just like randomly announcing that we're going to buy our own token because we think it's undervalued, like which Apple and many companies do. If that makes sense.
If you get yield from the fees by staking the token, is it not qualifying the token as security?
Yes.
It's security then.
Well, yes. It is, but a lot of DeFi protocols, like for example, I like Hyperliquid and the HLP product, where you can just like, you're essentially loaning money to their market maker. They make money, and then they pass through the proceeds of like market making to you. So, and there's other like GLP on GMX used to do that.
Then you have money market. You just give a loan in your token theoretically.
Well, yeah, it's basically
interesting approach. I need to remember.
It's cool. Hyperliquid is cool. Yeah, you should check it out.
Yeah, you should also listen to their recent podcast with the Hyperliquid founder. He talks a lot about why Hyperliquid is not taking any fees at the minute.
Will do.
Okay, let's move on to what you mentioned earlier, Anna, in relation to like yield and in particular staking rewards, right? I love staking personally, but I can see the industry evolve into, like especially now that we get a whiff of the bull market. How do you think this would impact staking rewards in general? Do you think people, like when a massive unstaking happens, as people rotate their yield or like their assets into other asset class and alt classes, how do you make of this?
As in the staking rewards from like Ethereum or like more
Ethereum
different?
in particular, but any other token class in general?
I think the yields are too low for people to, like on Ethereum, for example, you're earning like 3% from 3-4% from liquid staking.
But you get it in Ethereum, and Ethereum is equal one Ethereum, So if Ethereum costs 12,000, maybe very soon, not financial advice at all, then your 3.5% just make right now like 4 or 5x. Maybe?
That's true.
Yeah,
that's true.
Yeah,
then
it's
gets exciting.
15 percentages.
Yeah, okay,
maybe
that's
more.
True. I didn't think of that.
I guess my question was underpinned by the assumption that because people are going to rotate their money into other asset classes like alts, there could be a potential of like a lot of unstaking to rotate this money into those verticals, right? So that's the first assumption. But the second question underpinning that assumption is, what happens next?
Happens next after what?
After like what happens next to all the staking rewards? Do you still see this as one of the revenue generating?
The thing is, if the revenue from staking coming from not thin air and from nowhere, then it will of course exist. So for example, if you stake Ethereum and Lido, for example, so it has specific purpose. It has specific value, like value creation, I would say. And then, of course, it will still exist because like we need to ensure that the network is safe and your tokens or your Ethereum generates more Ethereum because it generates value. Other staking mechanisms where maybe no value is created and maybe treasury is just distributed, then of course it will end because it's not sustainable. Yeah, everything what is not sustainable will fail for sure. Yeah.
Okay, how are we doing with time? All right, so maybe just one final question for you guys. Do you have any like final words of advice to other founders who are here or people interested in the space in relation to like thinking about how do we make money here?
It's not about money. It's about having freedom to discover investment opportunities, to grow on investments. Just how I see it.
I think it's just build good products, and then there's always a way to monetize your product if you want. But you need to have a good product first.
yeah, just echoing that. Don't focus on making money. Focus on making a great app that people will use.
All right. Thank you so much, guys. Thank you for bearing with us, and hope you enjoyed that conversation.
Thank you.